This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, June 29th, 2015. Euro dollar. So the market has gapped open significantly lower into Monday trade. After closing around 111.60 on Friday, the market opened up around 110 and has put the pressure back on the downside, with the focus now on a retest of recent critical lows at 108.19. The market does have do a good job of finding a way to fill gaps, and we've seen that major gap since the Friday close, and so there is the possibility that we fill this gap back up towards the 111.60 area before the market looks to head lower once again. But overall, a lower top looks to be in place around 114.67, and deeper setbacks are on the cards back towards 108.19, which guards against that critical multi-year base from earlier this year, that 12-year low down at 104.62. At this point, only back above 114.67 would really take the immediate pressure off the downside. Again, there is still risk nonetheless of the market trading higher to fill that gap from the Friday close and trade back up towards the 111.60 area before heading lower. Sterling dollar. So cable remains under pressure since putting in fresh 2015 highs several days back at 159.30, and the focus now shifts to the downside with a test of previous resistance now turned support in the 155.50 area. But while the market holds above 155.50, the structure remains constructive, and there is still risk for a retest of the 2015 high at 59.30. However, a break and close back below 155.50 would do a good job of putting the pressure back on the downside. Dollar yen. So dollar yen has also seen an impressive gap open on Monday trade, with the market now trading in the 122s and stalling just shy of previous resistance now turned support at 122. There is still risk for downside pressure to actually take out that 122 barrier, with the market seen correcting on a longer term basis, although any setbacks below 122 should be very well supported in favor of a resumption of the broader underlying uptrend back above eventually that recent multi-year high at 125.85. Euro Swiss. So another gap here with Euro Swiss opening down in the 103s, although the market has shown some really formidable, really strong internal support in the 103 area, and the market continues to show signs of basing since putting in a low back in April around the 102s. At this point, look for the market to hold above 103 on a daily close basis, above this internal support, in favor of a resumption of gains back to the top side to fill out that gap that we saw since the Friday close and head back towards some recent highs at 105.75. A break above 105.75 is critical and will be needed to open the door for further acceleration back towards the February peak at 108.15. Aussie dollar. So Aussie dollar continues to consolidate off recent lows, although the market remains locked within a well-defined downtrend. Eventually, we see there's risk for a break below the multi-year low that was set earlier this year at 75.33, and for this to open a fresh downside extension towards the 70 barrier further down. At this point, any rallies are seen well capped, with only a break back above recent highs at 78.19 to take the immediate pressure off the downside. Dollar CAD. So dollar CAD is looking more constructive in recent trade, although the market is still locked within a more well-defined medium and longer term uptrend now. A higher low is now sought out in the 121.60 area, which will be confirmed on a break back above recent highs at 25.63 and expose a retest of the 2015 high at 28.35 further up. At this point, only back below that low that we saw back on the 18th of June, which comes in at 21.27, would take the pressure off the top side. Kiwi dollar. So Kiwi continues to extend its declines, with the market trading down to fresh 2015 lows in Monday trade at 67.85. At this point, deeper setbacks are seen down towards a measured move objective in the 65 area, though with daily studies oversold, there is risk for a short-term bounce before the market heads lower. However, ultimately, any rally should be very well capped, with only a break back above 72.32 to take the immediate pressure off the downside. SPX 500. So the S&P 500 has gapped open much lower on Monday trade, and the market is now showing significant signs of a formation of a major top of those record highs that we saw in May at 21.37. But for this to come to fruition, the market will now need to take out critical support going back to March, which comes in at 2040. A break and close below 2040 will do a good job of confirming a topish structure and accelerate declines in this market. Inability, however, to take out 2040 will still keep the more medium-term pressure on the top side. Gold. So gold has done a good job of once again bouncing out from some internal support in the 1170 area, and while the market continues to hold above this level on a daily close basis, the prospect for a longer term base remains intact, and for the market to trade higher back above recent highs at 1232 and towards the 1300 area further up. At this point, only a close below 1170 would give reason for concern and expose a retest of the 2014 multi-year base down at 1131 further down.